Shiba Inu derivatives traders just triggered a massive positioning shift that caught the entire market off guard. Futures open interest exploded 16% in 24 hours while spot volumes collapsed. The setup mirrors every major reversal pattern from 2024 and 2025. Smart money is already positioned for what happens next. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The cryptocurrency market entered February 2026 wrestling with extreme uncertainty. According to market data, total market capitalization stabilized at $2.48 trillion with 24-hour trading volumes reaching $239.83 billion as of February 7. Bitcoin commands 57.04% dominance and surged to $70,862, while Ethereum climbed 9.68% to trade at $2,089. However, market sentiment tells a drastically different story. The Fear and Greed Index crashed to extreme fear territory, registering just 6 according to sentiment tracking platforms. This represents one of the lowest sentiment readings recorded during the entire 2025 to 2026 cycle. Historically, such extreme pessimism creates ideal accumulation zones for contrarian capital seeking maximum value. Shiba Inu weathered this turbulent environment while maintaining its position as a heavyweight meme coin with a $6.5 billion market capitalization. As reported by analysts on February 7, the token demonstrated early signs of technical stabilization after breaking a short-term downtrend. The token held above the key pivot level of 500 to 96.7 units throughout the past 24 hours despite earlier dropping, from a daily high of 640 units to a low of 597.1 units. The broader crypto landscape showed mixed signals. Bitcoin futures open interest expanded, while altcoin trading activity contracted sharply. This divergence typically precedes either significant volatility expansion or extended consolidation phases depending on how macro factors develop. Derivatives markets experience a dramatic shift in Shiba Inu positioning during the 24-hour period ending February 7, 2026. According to market trackers, futures open interest climbed 16% within a single day. Total committed positions reached 11.21 trillion Shiba Inu tokens, valued at approximately $69.2 million. This open interest surge reflects trader demand and directional conviction, suggesting participants are rebuilding exposure after recent price weakness. Exchange distribution data reveals fascinating positioning dynamics. Gate Exchange dominates this renewed activity, accounting for 41.64% of total Shiba Inu open interest during the measurement period. Traders on Gate committed 4.77 trillion tokens worth approximately $28.82 million. Bitget follows with 13.6% of open interest valued at $9.41 million. OKX and LBank hold 11.21% and 1.28% respectively, representing $7.76 million and $7.81 million. Despite the futures market enthusiasm, spot market activity tells a contrasting story. Trading volume declined 47.35% to $180.48 million according to market data. This falling volume creates a technical divergence that demands careful interpretation. Reduced spot participation combined with rising derivatives interest typically indicates professional positioning ahead of anticipated directional moves. On-chain metrics add another critical dimension. As reported by blockchain analysts, more than 700 billion Shiba Inu tokens moved across exchanges during the past 24 to 48 hours. Analysis indicates outflows exceeded inflows, suggesting reduced selling pressure as investors transferred tokens into private wallets after reconsidering sell decisions. Market capitalization data places Shiba Inu at $3.65 billion as of February 8, 2026. The token currently trades at 620 units with price action showing mixed technical signals across multiple timeframes. Over the past 7 days, Shiba Inu declined 6.6%, though this movement reflects broader market consolidation rather than project-specific weakness. Technical indicators paint a bearish short-term picture. The 50-day moving average sits above current price and continues falling, potentially acting as resistance for future upward movements. The 200-day moving average has declined since February 2, 2026, indicating persistent long-term weakness. On weekly timeframes, the pattern reinforces this bearish structure with the 50-day average falling since July 20, 2025. However, sentiment analysis reveals intriguing contradictions. Market indicators signal 20% bullish sentiment despite the fear and greed index displaying extreme fear at 12. Over the past 30 days, Shiba Inu recorded 8 green days out of 30, representing 27% positive performance with 8.8% price volatility. The futures positioning data provides the most compelling evidence of shifting dynamics. The 16% increase in open interest occurred while spot volumes contracted, creating a classic technical setup that often precedes significant price movement. This divergence between derivatives and spot markets typically resolves through sharp directional moves once catalysts emerge. Circulation supply data confirms 500 to 89.24 trillion tokens remain in active circulation, with market depth sufficient to accommodate institutional scale transactions without excessive slippage. Professional traders favor futures markets during periods of uncertainty because leverage allows efficient capital deployment without requiring full position sizes. The 16% open interest surge while spot volumes fell 47.35% reveals sophisticated positioning strategy. Institutional desks typically accumulate derivatives exposure before committing spot capital, using futures to test conviction levels and manage risk efficiently. The exchange distribution patterns provide additional insight. Gate exchange, controlling 41.64% of open interest, suggests concentrated professional activity rather than dispersed retail participation. This concentration often indicates coordinated positioning by trading firms with similar market views. The remaining distribution across BitGet, OKX, and LBank shows broader institutional engagement across multiple platforms. Market structure analysis highlights Shiba Inu's unique position within the meme coin sector. The $6.5 billion market cap places it firmly in institutional liquidity territory, far exceeding minimum thresholds required for professional capital allocation. This structural advantage differentiates Shiba Inu from lower capitalization meme tokens that struggle to attract serious institutional flow. The on-chain outflow data showing more than 700 billion tokens leaving exchanges directly contradicts typical distribution patterns. During genuine bearish cycles, tokens flood onto exchanges as holders prepare to sell. The reverse flow observed during early February suggests accumulation behavior masked by weak price action. This divergence between price performance and holder behavior creates the exact conditions that precede major reversals. Technical indicators remain bearish across multiple timeframes, yet sentiment sits at extreme fear levels historically associated with market bottoms. This combination of negative technicals and oversold sentiment creates asymmetric risk-reward scenarios for position traders. The futures market clearly recognized this opportunity, explaining the rapid open interest expansion. Short-term price action for Shiba Inu faces critical technical resistance over the next 2 to 4 weeks. The token must reclaim the 640 to 650 unit zone to validate any bullish reversal thesis. According to technical forecasters, Shiba Inu price could increase approximately 4% over the next 7 days, potentially reaching 710 units. The uptrend strengthens if price consolidates above current levels, whereas failure to hold support delays upside progress. February 2026 outlook depends heavily on ecosystem development and broader crypto market cycles. Market analysis suggests a potential 35% rally culminating at 920 units by month end, contingent on sustained on-chain activity and continued community engagement. This projection targets recovery of key psychological levels lost during the January correction. The bullish scenario requires several conditions. Futures open interest must continue expanding without triggering mass liquidations. Exchange outflows need to accelerate further, tightening available supply. Broader market sentiment must shift from extreme fear toward neutral territory. Bitcoin stability above $70,000 provides essential macro support, enabling meme coin momentum. The bearish alternative presents equally compelling arguments. Failure to hold the 596.7 unit pivot support reopens downside risk toward 555 units, representing October 2023 lows. Concentrated futures positioning creates liquidation, cascade vulnerability if adverse price movements trigger stop losses. Macroeconomic pressures, including persistent inflation concerns or unexpected central bank policy shifts, would likely evaporate speculative interest across the entire digital asset sector. Where do you see Shiba Inu heading over the next 30 days? Will the 16% futures surge translate into sustained spot buying, or does concentrated positioning create dangerous liquidation risk? Share your price targets below. The combination of surging derivatives interest, declining spot volumes, and massive exchange outflows creates one of the most intriguing technical setups for Shiba Inu heading into mid-February 2026. Whether this translates to price appreciation depends entirely on broader market cooperation and continued positioning conviction.